And joining me in studio now is Mr. Matt Chipman. He's the editor-in-chief of the Green Baron Report. Matt, good to see you.
Good to see you again, Don.
It's been a little while. As a matter of fact, the last time we had you on the program, we were talking about this meteoric rise in the Dow. Boy, we should have kept our mouth shut.
Probably so, but you know, it actually, we were starting to have trouble finding true good value companies in our space, and the decline has opened us up to tremendous amount of value plays here, and so we're actually going to be more active than ever.
It's almost like it's a big sale at Walmart again, isn't it, as far as the stock market?
You see stocks that were trading at, you know, like in our arena, 30, 40, 50 cents, they come down to 12, 15 cents. Stocks that were $1.50 are now 75, 80 cents. So, I mean, I find this is, I look forward to dips like this, and I do think, you know, a lot of people say we're in for a whole lot of trouble. You know, maybe we are waiting for the next shoe to drop. We find this is, you focus on the right companies that are value opportunities, and you start getting positioned.
Well, you know, the people who follow the currency markets, you know, have kind of led this whole wave of concern, because it was just really a couple of years ago that we were reporting on this program that the euro was poised to become the world's currency, usurping that role of the U.S. dollar. And now we've seen a tremendous fall with the euro, and that's got a lot of people concerned, especially with all the austerity measures that European countries are having to take to unload their debt.
Well, the concerns that a lot of the European countries had when they established the euro to begin with are now starting to come back to haunt them. You've got, of course, you know, we all know the countries that are having the most difficult times with managing their debt. And, you know, there's a lot of arguments going on as to finger pointing as to how we handle it and how much those individual countries should be responsible for that debt and how they're going to, you know, raise taxes to bring in more capital to pay it off.
It makes me wonder if there's going to be some kind of move afoot amongst a couple, maybe one or two European countries that may plan an exodus away from the euro and back to their own currency. I mean, there is some talk about that.
I'm sure there's some hand-wringing and some discussions, backroom discussions about how to handle this going out longer term, because it's certainly, you know, I think it was nice to hear today from the Chinese that they are not interested in starting to liquidate some of their huge $2.5 trillion debt in European countries. They seem to have shored up confidence that that's not going to happen, because if they start selling, boy, that's a domino effect we don't want to see.
No, and I don't think we're going to see that anytime soon, because frankly, if they started selling right now, it would drive, you know, the value of everything down, and, you know, what would they really accomplish from that? No,
and then we're seeing, you know, now the benefits of some of the things that the U.S. did last year. I mean, they're starting to liquidate positions in things like Citicorp, to the tune of a $1 billion plus profit, and some of those profits are going to be necessary to pay all the refund the FDIC that keeps on absorbing banks, it seems like, every other day.
Yeah, and you're absolutely right. Now, you know, we look at any kind of correction in the market. We saw, you know, the thing balloon past 11,000. We always look at the Dow as the barometer of the overall markets, even though we're only talking about, you know, a selected number of companies. But it blasted past 11,000, fell back under 10,000. Everything kind of fell along with it. So there's a lot of buying opportunities for someone who knows where to look.
Yeah, I think a lot of the market technicians, they really look at the S&P to see where those support levels lie, and we were starting to get into that level or violate those levels where some of even the bearish traders and traders were considering going in. You know, they were talking, you know, the S&P at 1070, oh, I'd like to see it at 1020, 1030. Well, it's not really that far off. No. So, you know, you can start getting your feet wet, and, you know, we know that the storm clouds have not gone by any means, but the action in the market right now is looking like it's starting to form a bit of another bottom, and you don't want to miss the buying opportunity. So you don't go in with both feet. Maybe you start dipping your toe in and start looking here, and that's why we see some real values ourselves.
Now, of course, your company and our company tend to follow the same industry sectors, not industry sectors, but market sectors, you know, small and micro-cap companies. For people who want to know more about the Green Baron Report, how can they find out more information?
Just go to thegreenbaron.com, click on any Join Now link, and just give us your email. You can, we are very protective over your email, and we only send you our reports and updates. We have a new pick coming out Wednesday after the close. Our last three have been absolutely tremendous, so we hope that you would follow our suggested stocks that we look at.
Once again, the Green Baron Report, as Matt just mentioned, their website is thegreenbaron.com. Be sure and visit that. Matt, always a pleasure.
Nice to be here, Don. Thanks.
Take care.